Hey, hello everyone. Welcome to our M Plus weekly highlights. And today we are going to share with you on what are the stock that we have put in and how does it fare for today. Basically, okay, can you see my screen? If you can see it, then maybe you can put in the comment. Yes, YES, yes. Okay. Okay, so today let's check at a glance what do we have in the stock market for our side, because we have very strong GDP numbers, and those are the things that we marketplace are actually focusing on. And today itself, you can see that the technology stocks is up, consumer is up, telco and media is up, transportation and logistics is up, and utilities. Basically, it is quite fare quite well with our GDP sectoral view, because most of the things are up except for mining and also agricultural. So that's why mining is in the energy sector, and plantation here is down as well. The rest mostly is the consumer and retail trades, technologies under export related, telco and media, I think under utility, so people use more, and also transportation and logistics is under the shipping sector, and also utilities, which means that we are looking into some of the recovery in Tenaga, YTL Power, Malakoff, and things like that. So overall, this is some of the things that we can take note of. But certainly, we have put in technology for today's trading opportunities. We have put in also plantation, but plantation didn't move that much today. We have put in consumer, which is the later on I will share with you, and some of the counters under property sector also put in. We thought that might be having some lagged plays. Okay, so generally speaking, today's market is more towards profit-taking activities rather than continue to push up higher. And overall, we can see that GDP might peak right now, might peak right now, and 8.9% might not sustain until third quarter or even fourth quarter. The reason being is my feeling is that this is over the expectation due to the April until June, we have the international borders being uplifted, Then we have the workers coming in. We have all this construction started to roll out their backlog orders and things like that. So generally speaking, the strongest quarter definitely is the second quarter. But going forward, whether the pent-up demand can sustain until third quarter and fourth quarter, then we shall see. But even though we don't have the strong growth in third and fourth quarter, we are still fine because this year itself, we are looking at our uh, Bank Negara forecast is at 5.3 to 6.3%. Okay, so that is one guidance. And even though we don't have any strong growth in the second half of this year, we will still meet, within the 5.3 to 6.3%, because first half already we have gotten 6.9% growth. So which means that in second half of this year, I believe that even though there is not much growth, maybe 1-2%, we are still able to hit the target. Okay, so I think that is the whole idea here. We are still anticipating that the sideways move should be seen on KLCI on the back of profit taking activities. Once we have gone through the once we have gone through second, you know, the second quarter reporting season, which is at the end of this month, then we shall reassess again our situation from that point onwards. So overall, I would say that this trend may sustain, but in near term wise, we need to see profit taking activities. Then only third quarter and fourth quarter people will position themselves for stronger sector or sectors that are going to move. Okay, so that is just my view and forecast for the rest of the year. 8.9% is very strong. I believe that it may sustain to maybe around at least above 8% or 7% growth, I think, for next quarter. Then later quarter, maybe about 5 to 6%. I think that will be the range that everyone is anticipating. A lot of brokers are saying that it is above 6% for the 2022, and that is still fine because it is still within expectation for from the Bank Negara. Okay, so for stock picks wise, you can see that generally. Hold on a second, my chart. Yeah, okay. So generally, we have put in several names, which is under the tech related, like Unisem and Genotech, and also Gtronic. Okay, so these are the three companies that we put under the technology stocks. Okay, so I believe that these three companies, only one is being triggered, which is Gtronic, and Gtronic is triggered, but it did not really move that well. It is just moving above the 2127 and it's traded around this level for the past few hours. But if you take note of the daily chart, I think this is worthwhile to take note, because most of the stocks under the tech counters are near towards the SMA 200. So which means that there could be, opportunities for the laggard plays such as Gtronic. So cut loss point definitely will be near towards the range of, the range of 124, 122 level. Resistance wise, I'm looking at 140. 138 towards the SMA 200, which is near towards 143. So overall, I'm still anticipating that laggard plays can still make up for the ahead of the earnings. There should be some trading opportunities, and playing a catch up, I think, is worthwhile looking at it, because those companies that have flourished throughout the past 2 weeks, those are the ones that is getting profit taking activities, but those that are laggards may have a chance to move higher. So I think at this point of time, really we can think about this as one of the opportunities to move higher. One of it is Gtronic. Then the other one is Unisem and Genotech. These two companies are being put in, and it has been traded higher. So last Friday's price highest point was 302. Right now is highest point is 310 and closing at 306. So I think it is nearby towards the SMA 200 level, 316, 317. But I still see that there are some opportunities. So because it is still moving higher, firstly, and this is trying to challenge the resistance along this level here. So basically, this level 312, 316, this is the strong resistance. Once it is able to break through, then perhaps we can see further upside. And especially right now, it's having a double bottom formation, and it is awaiting for the neckline breakout near towards this range. Okay, 310 to 332. And once it is able to break out above this level, then we have a good opportunity of upside momentum. And bear in mind, this is very in line with several indices out there, such as Nasdaq. Nasdaq is actually making good progress of 13 to 14% rebound recovery from the recent most bottom near towards the June-July period. So the same thing goes with our technology stocks. So we have also come a long way, because after the downward trend, you can see that it went down to near to more than 40%, then recovered back. Right now it's let's say 14, 15 to 18%. So but again, this 18%, is it able to continue to surge higher? That we are looking at a very good chance. Okay, very good chance that it should continue higher. Why? Is because overall sentiment right now is turning to consumer sentiment turning better, less dovish, less hawkish in FOMC meeting, therefore less hawkish, and that would allow lesser interest rate hike, and potentially market is perceiving that as a good sentiment for the technology stock. So overall, technology sector may have a very good chance to revise higher in the near term, especially right now it's near towards the earning season, and we know under GDP it is export sector that is actually moving strongly. One of the sectors that is moving strongly, and therefore that should translate to back to a strong earnings report coming into August. Okay, so that is just one of the idea. Okay, here. So we have just now Getronic, Unizem, and also Genentech. Genentech also went up, but it did not trigger anything. So it seems like it is a bit stretched and gap up, but it didn't trigger our signal. But it's all right as long as it triggered. We will monitor and follow through. But if it doesn't trigger, it's all right. So we'll continue to monitor what is going to happen next. So we are going to look at 271, 272 level as the next resistance point, and support is located near towards this zone of 244. Okay, 244, 245. So basically we are looking into this range of trading. But what if it falls below this range of 245 level? Then perhaps we are looking into some profit taking activities down the road, and therefore we shouldn't be looking at we should be looking at profit taking activities and further downside risk to be seen. But for now, everything is still rosy, so we just go with the flow, and hopefully that it can lift us higher towards 272, or even the higher zone around 291. So overall, our mindset is correct. Today is technology day, and so that's why we have put in three, at least three counters for trading opportunities. For plantation, we definitely are looking at plantation stocks. Why do I say so? Is because, let me show you the chart. Okay, hold on a second. I'll bring up this chart. Okay, if you notice that plantation counters are moving higher, is because of CPO prices is actually moving higher as well. So CPO prices has been moving quite strongly throughout this period of time. It has rallied from 3007 towards 4004. Right now it is shifting over towards the next contract, and therefore it has kept down. But overall, you can see that it is forming the base and forming this 4,200 neckline as well. So overall, I'm seeing that this could be a strong potential uptrend move, but it shouldn't cross above 5,000 for the timing. We are projecting that this recent rebound could actually hit 4,006 towards 5,000 zone, this range, and if this continues to go higher, it would definitely benefit overall plantation counters. And we have, we have right now, we are not right now going through a phase whereby people should be buying ahead of the results and sell after. And this is a period whereby it is uh, what do we call that? We are having Indonesian workers coming in. So more workers means more, taking of the FFB, fresh fruit bunches, and to sell, and that should allow earnings to creep higher. Okay, so earnings should be better in August due to that reason. But the most of the earnings might come in November. So people might be, putting in their this kind of counters into their basket until November. Okay, there are two ways. One, short-term trading is buy ahead of earnings, sell after, but another player may be looking at midterm to buy right now and sell after November. So that could be the one of the trading opportunities. So for TSH, it has been slowly growing from the 105 towards 115, and next target we are looking at will be around 126. Okay, 126. That is around this SMA 200 zone, and support is located around the 109, 108 level. Okay, so this is TSH. I'm still looking at a very positive move on plantation counters, especially you can look at Sign Plant. This is one of the biggest player in town. They are actually above the SMA 200, so which means that all these news catalysts out there, despite Indonesia flushing out the CPO into the market, we are still seeing plantation counters being grab uh, scoop up since 385 towards 460. So that is a very good, almost maybe 15 to 20% gain. Yeah, okay, near to 20% gain over the past 2 months period. So overall, I would say that there are quite a good number of opportunities under the plantation counters. Let's see whether does it pan out. If the CPO prices can sustain above the 4004, then we are able to see further upside. Okay, so but we are also putting in this as a daily picks, because we believe that people will trade ahead of the earnings and sell after earnings. So that is just my speculation on plantation counter. So this today we are putting B plan and also DSH. Under consumer related, okay, consumer related definitely is slightly more positive because of the event of GTB, whereby they said uh, uh, the retail trade and also warehouse, all these are actually benefiting in second quarter. So which means that if we look into second quarter, that will translate to August reporting month result, and we can actually put our some of the position or portfolio consumer sector under our portfolio. So for Bonia, it is forming the sideways ranging market right now. It could be a sideways market right now, and we are looking at a very potential chance that it could break out, and it should generate something like this: breakout, pullback, and consolidate, and another breakout above the 228 level will confirm the upward trend. Okay, and next resistance that we are looking at will be around the 250 or perhaps towards 277. So let's see what is the trend that we have for the upcoming ahead of results. But I believe the people are already anticipating things to happen because of this upward trend, pullback, and potential breakout continuing going forward. So we shall wait for the breakout to happen. If yes, then it should give us a good opportunity. Our signal has actually given us 9 a.m. in the morning, trying to see some good breakout moves, but it didn't have any follow through interest. So we shall monitor. Yeah. For this, Fiamma is under the consumer electronics. This is also having a very good trend here. You can see that it pulled back and it rebounded off the EMA 20. It pulled back, then it gap up. It break out, forming the flag formation breakout. So this is considered as a breakout, pullback, and continuation pattern. We are really monitoring closely on this counter, and hopefully that it can surpass this level or hit around this level here, which is near towards 1 ringgit zone towards the 105. Support cut loss point is definitely around the 93-94 cents level. Okay, so this is under the consumer electronics and consumer related products. Especially right now, we're talking about GDP has given us a very good signal that overall everything has grown. Okay, everything has grown, have very strong growth in various sectors, and only two sectors. One is the mining and also the agricultural. But agricultural, I'm looking at it more towards the sentiment play. So after the results, if it is slightly better, you can actually put in more into November, because right now is the peak period whereby they can actually take more fruits of the palm oil fruits, and then that should allow them to translate to better earnings going forward. Okay, so Fiamma is one of them. Then last counter for today's daily pick was Sign Property. Okay, Sign Prop, we are using this as a laggard play. We are not too sure whether does it pan out, but it didn't give us a signal yet on the breakout. So we're going to still monitor 48 cents as the resistance, and there are still some way to catch up, from this 48 cents level towards the 57 cents level. At the same time, this will be intermediate resistance 50.5, 53.5. Why do we pick Sign Prop? Is actually, if you look in the Eco World and also SP Satya, they have actually been trading higher. So we are looking at a laggard play point of view for Sign Prop, because this has actually rallied from 61 cents towards 70 cents level, 15% up. SP Satya also went up quite substantially from this range of um, 70 cents towards 80 cents, which is around 15%. But Sign Prop didn't really make a move. So it was, the highest was 10%. So throughout this period. So I'm expecting if 15%, that would be around 52 cents range. So that is in the middle of this resistance zone. So I'm still looking at, ways that to justify a breakout above 48 cents, but seems like if it doesn't give us any signal from the M plus WIS indicator, then we shall forgo. So today we have just 1, 2, 3 counters that been triggered, and under our traders list there are multiple of stocks being triggered. So I think you can actually monitor that. One of it is Sign. Sign was one of our best picks early on during this period of time, and we are monitoring that it should continue to grow higher towards maybe 158 or even higher towards 166. Evergreen is also one of the counters that has been performing well and trying to put out a flat formation breakout. So just trying to monitor. I think it is still not done yet for Evergreen. GOB is one of our perfect flat formation breakout. Today it has breakout. I think most of the people has taken profit because of 34 cents towards 37 cents. There are more than 2.5 cents range for you to take 5 ticks away. TaxCam is also another very strong performing stocks throughout time. So we have put in since this part of the day, and has rallied as well. Great Tech, V's, all these are past 7 days track record that we have put in. That it has triggered us some good trading opportunities. Okay, so these are some of the trading ideas for the time being. So before we end, we'll go through some of the questions. Make sure you have put in your comments, and make sure that you have also um, shared the video out, so that you have a sharer badge. Then we will review a stock. So I'll go through the stocks right now. So those are the ones that have shared the video out and have a sharer badge, and I will go through the stocks portfolio. Stocks review. Okay, for MPI, it is similar under the tech counter. I'm looking at this as still a profitable and good trade opportunity. Just that it has been just rallying. Just moving into sideways formation. Although there's a flat formation breakout, people are still not, buying above the 33 ringgit level. So I think we shall monitor 33 ringgit, very significant resistance. That once it is able to break out, then next target should be around 37. But overall, ringgit will be the support right now. I'm looking at the sideways negative bias tone until it can surpass the 33 ringgit. Okay. SFP Tech, this is under the related to precision engineering EMS players. These are beneficiary of this China and Taiwan tension, and therefore this is still an uptrend move. But I'm reckoning this would be something to ponder whether it can continue such higher or not from this range of breakout 1 ringgit zone towards 150. We are still thinking that yes, it has a chance because it has not make a pullback move yet. But overall, if you are using the trend line here, you have to have a very nearby cut-off point, which is near towards 115. It is for if it is falling below 115, then I think should be taking. You should be taking. You should throw your profits higher, and cut your position short once it is falling below 115. If you look in the 30 minutes chart, it is still positive. It's still positive, and still have a chance to move higher. So you just have to monitor the 115 as a very significant support zone. If it is falling below that level, and I think should take away. Okay, take it away. So which means that you have to sell it off once it's falling below 115. FGV, I think still wobbly. I think shall not put too much effort into looking at this counter. More towards a GLC play, and I think earnings wise may not come in up to expectation. So I think should actually monitor to sell off. Because I think it is a negative bias tone for now, and is still below the EMA 200 zone, and it is not as decent as TSH. TSH has actually been moving slightly higher and higher as compared to FGV is just moving sideways and slanting down. If you notice that TSH is actually closing up towards the SME 200, so it has although it is below SME 200, but it is actually creeping higher. But as compared to FGV, FGV is still quite sideways and still pointing downwards. I would say that the chances of FGV might not be as strong as compared to TSH, and I think you should avoid FGV. And once it is crossing below this range of 150, maybe we have to take a good look at cutting loss. Okay. Okay, BIG, certainly under the construction building material segment is still decent to hold on to it because it is still hovering above the 81 cents support of the this is the SME 200 zone, and we are going to monitor breakout potentially above the 89.5. I'm expecting the uptrend move still can sustain. Okay, so it needs to hover just sideways first for the time being, and then a breakout thereafter. Okay, so as long as 81 cents is being supported, I'm still thinking that there is very good chance. Okay, so hold on to it until it breaks below the 81 cents. Okay. Eno price I think is positive. I'm looking at this as a very positive move. You can see that this is much higher as compared to FGV and also TSH. It is still hovering into a so-called symmetrical or triangle formation. We are going to wait the breakout to happen. And Eno price has been all this while having a very good earnings report. So people might go into this counter ahead of the earnings season and sell after that. So overall, next target will be around 162 or even towards 176. I'm anticipating some good progress in Eno. Okay. So next one is RHB. RHB Bank. I think banking stocks may take a breather. Although we are still saying that the interest rate hike might come in, but if the FOMC or Federal Reserve is actually taking some slightly dovish tone or slightly less hawkish tone going forward, that would affect the central bankers in town or in the whole world, and that would affect the amount of interest rate hike for Bank Negara. OPR hike might not come in as frequent, and it will be a measured and gradual process. And because Bank Negara said that they will be doing a gradual and measured progress going forward. So that may already sound and a move to people for profit taking activities. Okay, so for RHB Bank, I think if you want to trade, I think may not be that easy. And I would say that trading range may be located around the 570 zone, 579 towards the 6 ringgit and 10 cent zone for the time being. And I'm looking at this as a selling opportunity rather than a buying opportunity for RHB. Okay. So Hata, I think it has been a strong whiplash, from market players after it can't deliver a very strong result. And the ASP is still having some pressure, but I see that the potential is there. Why do I say so? Is because in 30 minute charts, I'm looking at already a bullish divergence, just that needs to clear off certain level for upward trending or rebound move to happen. 192 is definitely the key point that people are looking at. 210 level, 232, and also 249. So these are the few levels that we are looking at. If it is still falling and not able to cross above 192, not even 192, then we shall be anticipating further downside potential. So for the time being, 192 is very crucial. Once it is able to break, perhaps we have a chance to trade towards 201. And bear in mind, there are a lot of selling pressure in Hata or in glove companies. So please be aware. Right now, I think it's on the margin call. Maybe everyone is selling off together. So the climactic volume could also allow you to find a bottom here. Okay, I think you have to monitor for the bottom to form near towards this level, and this is a pre-pandemic, below pre-pandemic level, even. Yeah. So if you look at pre-pandemic level, it's February, March. That is around 5 ringgit. This is way below. Okay, way below. So which means that people are really negative sentiment, but at the same time, it will come up with a good trading opportunity right now. Okay, when people are very bearish on certain counters, it means that it could turn into a very positive trade if you can find the bottom. So if I clear off everything, last week was the very huge selling pressure, but today only the first day is uh, already hitting like 25 to 30% of last week's volume. And I think there are still some negative sign to come, but overall we are seeing some levels that we have not seen since 2017 2016 level. Okay, so that is very severe for glove players. Okay, so last two companies, Pavilion REIT and also Synergens. These are the last two companies that I will be mentioning, and I think there are no issues in REITs company. I believe that given the GDP number is so great, I think REITs is the one that will benefit because it's under the retail trade and spending. All these are falling in line with the trading opportunities that we can gather from the GDP note. So pent-up demand in April to June, and that should allow more earnings to be seen going forward. They have been coming out with results July 28th. So the results out, and people knew about the results already. Going forward, what is the view that is more important? So right now, I think more upside to be seen for recovery team, and REITs is definitely under the falling under the consumer. I would say that the growth might not be as strong, like GDP growth might not be as strong as second quarter, but it will not be weak as well. Maybe it's around 4 to 6%. That would be also a strong move, and that should allow more upside for REIT sector. Okay. Last counter is Synergens. Synergens is under the precision engineering, all these companies. So these are the breakouts happening on them, and definitely it should look great. Okay, on this company, the volume pickup on this part of the day, no turn sideways, and volume pickup again today. Today only half day is already very comparable to Friday's volume, and definitely this is going for a good breakout going forward. Okay, so I think you can monitor for breakout above 67.5. And a lot of companies like Coraza, SFP Tech has been making good progress, but this is definitely the laggard that may retest 71 cents and break out even higher. So going forward, this is quite interesting to monitor on Synergens. Okay, so those are the analysis for your stocks review, and we have gone through the daily picks and also traders list, and I think we have given you some good updates. I believe that right now people are still digesting what is going to happen in August reporting season, and I think you should be trading very monitor very closely on your stocks, because over the past 2 months there a lot of stock has been traded higher. Okay, traded higher, which means that it might be trading higher ahead of results, and after the results they will perhaps take profit on some of the shares, at least 15-20% rebound. That is a good range for people to trade. Okay, to sell off. Okay, so I think for now, that will be my view on the market, and we will meet you again next week. And thank you so much for tuning in to the M Plus with highlights, and see you again next week. Okay, bye bye.